Over the last 10 years, I have been involved in over £13 million worth of property deals. Some have been good, some have been bad, but the best ones have come from following this simple and boring playbook that I am going to share with you. I'm guessing you've clicked on this advert or this video for one of two reasons. You are wondering whether property is a move you should be making, or you've no idea where to start, and you don't know where to start without putting your hard-earned savings at risk. Now, my promise to you, in the next 10 minutes, hopefully shorter, I'm not going to show you how to get rich quick, and I certainly won't be stood by a Lamborghini telling you how to buy one of those. Instead, I'm going to show you the exact boring framework that helps me build a very simple but lucrative low-risk property portfolio. I want you to secure your first or second investment property with the utmost confidence in what you're doing. This strategy is specifically for people with small amount of savings sat in the bank. Anything between £20,000 and £50,000 that we've worked hard for, we've got maybe some inheritance or equity from a property, and we don't know what to do with it and where to take the next steps to grow that portfolio. Most people wait for the perfect time to buy property, but the absolute truth is there is no perfect time. And while you're waiting and your money's sat in the bank, you are losing it to inflation, i.e. your savings are worth less, and you are missing the boat as property prices rise and rent increases. To put it in perspective, the average property price in 2019 was £180,000. If you had bought then in 2019, when some people were sat on the fence, didn't know what to go on, were waiting for inflation rates to come down, if you bought at that point, you would have made over £110,000 to now in both capital growth and rental income. So many people have missed out on huge sums of money like £110,000 from not taking action, usually down to fear and lack of knowledge. If you do that once, that really hurts. Do that 2 or 3 times and let it run for 10 or 15 years and you're missing out on millions. I genuinely mean that. The real cost isn't just money, it's looking back and going, I wish I'd started 20 years ago, which I get loads on these calls. I wish I'd started sooner. The best time to start in property was 20 years ago. The second best time to start is now. We have inside Size Property Academy loads of people that have taken action and have followed the framework and have built and started building their property portfolio. They've done it with low risk, not necessarily with millions of pounds in the bank, and they've done it by just taking action and following our framework. We've got people like Cavan who has sourced 3 properties for people in the group that he's met. He's bought 2 properties for himself and he's done a joint venture. He's earned £15,000 from sourcing fees. He's earned another £10,000 from management of the build projects that he's done, and then he's bought 3 properties that will probably earn him anything between £1,500 and £2,000 per calendar month once they're rented out. Cavan's a huge testament to him. He's a young lad, 25 years old, and all he did was start. He's a gas engineer through the day, and then he does all his property stuff on evenings and weekends, and he's created a fantastic business for himself, and he's only just getting started. We've also got people like Zoe, who started with absolutely nothing. She went out and raised £110,000 in private finance, and then she's gone and bought 2 properties, one in Manchester that was tenanted already and is cash flowing and making her money to this day, and her second one is in legals and ready to go. Those 2 properties, if she buys nothing else for the rest of her life, will probably make her £500,000 to £600,000 over the next sort of 15 years, just by letting the rental income come in and the property prices rise in good areas such as Manchester. The first thing you need when you're starting out, a little bit like Cav and Zoe that I've just mentioned, is clarity. If you're stuck right now, it's probably because you're listening to about 10 different people on where to start. And trust me, the moment you've clicked on a property advert, there are another 15 that hit you really well. The algorithm will love you, and there will be a different strategy each time you scroll through that phone. But my job is to help people that have no certainty or clarity about what they want, and to help them streamline and get really focused. We want to focus on 3 specific areas to get you started. Understanding the basics and fundamentals of properties that get you past the hype and the get rich quick schemes, of which there are lots of people peddling that. We want to find the perfect sweet spot of deals that we can buy at discount, that we can get good capital growth, and they can get a great rental yield. And if you put those 3 together, we have the perfect formula. I am surprised, and not in any sort of negative way, at how many people think they know property but don't know what a good deal looks like. They don't know what the price they should pay for it, they don't know where to look and how to look for it, and they don't know the best ways of negotiating and finding a deal. You need to set a certain set of criteria, and we look at 3 really important fundamentals for our property. Are we going to create money day one? Are we going to buy well? Are we going to get good rental income at the back end of it? And are we going to not tie up too much capital when we look to remortgage that property down the line? The third part is absolutely key, knowing which area to invest in. There is no way that you should just go out there and buy any property in any location. No 2 locations are the same. For a start, we need to understand what our budget is and what our criteria is, which we've already potentially looked at. But we also want to find areas with good capital growth, we've got good infrastructure, good schools, areas where we're not going to get bad tenants, we're going to get good long-term tenants that are going to look after your property, and the property then in turn will go up in value because there is demand for that type of property in that area. For me, when I'm looking at good areas, I have a little sweet spot on what I want to find and buy. I know that properties between the £100,000 and £150,000 mark in areas that have good rail networks, good road networks, are near cities, are near blue collar work, such as big factories or distribution units, or good white collar work where there's going to be city and office work. We don't want to buy in really expensive areas where we're going to get no capital growth because they're already at the peak and we can't get a good rental yield. We don't want to buy in poor, rubbish areas. For me, we want a good yield, a good return on capital employed, and we always want to create equity. They are my three key metrics that I always look at, and they're what I teach in Size Property Academy and why we've had so much success. The goal is here not to be an amateur, part-time or professional student. It is to be a professional property investor that you run alongside your day job and your family. When you've got the clarity in the area and the numbers, we need to get the structure right. This is the slightly more boring side of property potentially, but the bit where people get it wrong so often. They hear the noise online and they don't know how to do it properly. What we want to do to get it right is to make sure that all the money we've just made on buying the right property in the right area doesn't get lost to the tax man and or get fined for doing the wrong things in the wrong place, and don't get the right mortgage product or the right lending product where we can make a maximum profit. So we need to understand what a mortgage is, what a buy-to-let mortgage is, what that looks like in terms of deposits and money tied up as capital. What is a bridge-to-let product? What is a bridging product? All these things are probably names and terminologies you've heard, but haven't quite got the full depth and understanding and the help that you need to take you to the next level. Most people know this by now, but do you need to buy in personal or limited company ownership? Again, it's something that is peddled around and spoken about a lot. It's more often than not, we do need to look in a limited company, but having the right company and group structure is really important for you. If you have a trading company that has profits and you want to move profits between the companies, there's ways of setting this up properly, and we have the right people in the right places to give you that advice. The way I look at a deal is never by chance. I always look at the data. We're always looking at lending interest rates and what we can get at the back end. How much money do we need to put into the property? What discount can we get on that deal? How much is the refurb going to cost? All these numbers need to go into the spreadsheet that I have created inside Size Property Academy, and then it will give us a price that we want to pay for that property. We don't want to go above the price that wants to pay. Even if the estate agent or the vendor thinks that that is worth a lot more, we can only pay what we want to pay on that property, and we do this by strong comparables using good software and good data that we have inside of Size Property Academy. Getting all of this right at first means you can buy with confidence and you can buy the right deals at the right time. The final part of the playbook is action. This is where most people fail because they are so scared to take action and get started properly. Most humans have the biggest fear of making a mistake. The fear outweighs the desire of making money through property. By the time you signed up and spent some time inside Property Academy talking about the things that we've just mentioned earlier in the video, you will have clarity and you will have support that will help you get that first deal. And then to get you across the finish line and to give you that absolute clarity and certainty, you need a good team around you. So I can help people get the deals over the line. You have full access to my team of professionals that I've known and trusted for a lot of years. We have Luke, our solicitor, that's done thousands of conveyancing deals and can get them done quickly and can get them done efficiently. A good solicitor is absolutely vital to getting a good price on a property deal. We've got our broker, Levi. Levi has done thousands of transactions and has helped get lots of people mortgages and bridging products and lending products. He's also an investor himself, so understands the buy-to-let market really well. We also have Simon, the accountant, who helps us make sure that we have the right tax structure, the right company setup, and can give any advice that we need so we're not overpaying on tax. Now, the exact framework here, where we've got clarity, structure and action now, is exactly what we implement week in, week out on Size Property Academy, and why we are getting such tremendous results within the academy. Christian joined me 18 months ago. I remember having the phone call with Christian. He's like, it's just not the right time. I've got 3 kids and a busy job. I was like, Chris, there's never a right time. 18 months on, he's raised over £1 million in private finance. He's bought 7 properties that cash flow him over £3,000 a month. He would have never been able to do that if we hadn't helped give Christian a little push. He had some clarity about what he was doing and took action on what we were saying. Look, I've done this for 10 years. I've made lots of mistakes, we've made some money, we've also lost money. My goal within Size Property Academy is to make sure that no one fails and that everyone can build a property portfolio that they deserve and invest the money that they've worked hard for and make more out of it. There is no pressure on this call to work together. At very least, if you don't feel like this is a good fit, we've hopefully given you tons of value and ideas to get started in property at some point. There's zero risk on this conversation, so I appreciate you booking it and look forward to seeing you inside the Academy.